Okay, welcome back. Shiv Sehgal is with us, President and Head of Nuvama Capital Markets. Shiv, good to have you back on the program. Thank you very much for your time. Let's get straight to your conviction call from here. Shiv, you're saying in the next 1 to 3 months, markets can see a strong between 6 to 14% rally, right? Here, between now and the next 3 months. So tell us the shape and structure and of what you expect to see, where you expect to see the maximum, force of this move coming in. Will this be fleeting? Just talk us through that. Yeah.
Sure. Thanks, Prashant. Firstly, a very good afternoon to you and your team. Let's just take a step back. You guys have been discussing a lot on your channel and, on what Trump is doing. So I just want to kind of reflect 2 minutes just on what's happening globally. Trump wants U.S. deficit to vanish from all countries. As you rightly have, pointed out, India has around a 45 billion surplus with US. India needs to pay attention to that going ahead. US tariffs on India goods is around 2.5 to 3%, while Indian tariffs to US are exceptionally high, around 10 to 11%. So there's going to be a bit of give and take there. It's very good to see that Modi was one of the first leaders to acknowledge that and have very meaningful dialogue with the White House administration. But the reality is that I do want to point out that there's something else going on globally, and that is why what's reflected in the markets as well. I'm not sure how many of your viewers knew that the day before, Xi Jinping sat down with China's tech elite, and in what looked like a very serious course correction to me. And we had the likes of Jack Ma from Alibaba, Ren Zhengfei, Huawei head, and this meeting was different. It was not about Xi, trying to tighten the leash. He was extending an olive branch. China has spent years treating its most successful tech firms like they were a threat to state power. And I think Beijing is quite threatened as to what the development is happening in Washington, and it doesn't like what it's seeing. The Trump administration is moving very fast, rolling back regulation, cutting deal with industry giants. And it's not only pushing AI, semiconductors, and defense tech, but it looks like there is a new space race there going on as well. And there is a massive stark contrast between what the US and what China has been doing the last couple of years. The US is fusing government and private enterprise at the highest levels, bringing in CEOs, founders, and investors to shape policy in real time. Meanwhile, China has kind of moved the other way in the last couple of years. And that is why if you look at where India and Hang Seng has done. So if you look at just the Nifty, Nifty versus the Hang Seng since COVID, there is a very stark contrast. Nifty since COVID is up about 200%. Our mid caps and small caps, mid cap index is about 370%. Small caps had a phenomenal rally of 400% as well. So meanwhile, China, if you look at what Hang Seng has done, Hang Seng is basically flat, right? There is a global allocation moving away from the laggards of the last couple of years. Yes, Jan 2025 has been slightly different. We have seen money move back into China. Hang Seng is up about 13-14%, but the similar trend is happening in Europe as well. Mostly everyone that came on financial media said that Europe is doomed. There's no growth, XYZ. But if you look at what's happening in terms of markets, DAX is up almost 13-14%. Similar story in France, similar story across Europe. So there is a global shift of money from asset allocators, not only back to the US, but also in some of these laggards.
No, absolutely, Shiv. Yeah. Absolutely, Shiv. And while you were speaking, we just put up that chart of, India, Nifty and Hang Seng over the last 12 months. And they always say that, people were always saying that the Chinese rally is a flash in the pan. It's a tactical trade. But when that trade runs for 12 whole months, it starts getting painful, right? Look at the stark disparity between these two markets and when the on-ground inputs from China are still a little weak, I guess, in terms of actual movement. But take your point fully. Global markets have marched ahead. It's not just the US, it's a lot of other markets as well. Where does that leave us? I was also going through, the earnings note that your team put out, and it's pretty bleak after the third quarter. And in fact, that note ends by saying that some of these estimates of 13, 14, 15% earnings growth for FY26 and 27, there's a risk of disappointment to those estimates. And the downgrade ratio is still pretty high. So what will make things turn here for us here in India?
So Surbhi, again, I want to clarify a few things here. right? Market is absorbing what happened in 2024 in India, right? It was a complete banner year in terms of, just look at some stats. In main board IPOs, India raised about $19 billion, another $1 billion in SMEs. If you look at what PE and VC exits happened, they were close to about $13 billion as well. And if I look at insider selling, that was another $5 billion. When you add up all these numbers, they're quite staggering, given the fact that in September, FPIs have been kind of exiting India into other markets. So we are, what started off in September as a healthy consolidation, and a lot of people kind of were expecting a time consolidation and a small pullback. Unfortunately, that given the last 2-3 weeks breadth has turned out into a more painful pullback. But if you look at the technical indicators, and this is where, coming back to your earlier point, Prashant, why I feel that we are at the cusp of an inflection point. If you look at Nifty 500, the market breadth is at historical lows. 87% of Nifty 500 stocks are trading below 200-day moving average. If you look at just the 50-day moving average, that number is even staggering at around 92 to 95%. So the capitulation has already happened. To being bearish at this point is not going, to be a little cautious in September, October was the right trade. To be cautious right now, while yes, there has been a multiple derating, which was kind of, on frothy levels. But what's happened is in this carnage, we have also seen very good quality stocks have collateral damage. So I think that's where the rebound is going to happen. We are going to see the rally is going to be led by good quality stocks, and we are going to see new winners emerge. And that is why a momentum and new highs will indicate to us which is the sectors that are going to lead. And, we are all in a wait and watch mode. There has definitely been a lot of pain, but we are getting quite constructive in the BFSI space. I'm super bullish on how metals are going to play out, how energy is going to play out. The India bullish theme remains intact. It's just that we have seen a global reallocation in terms of money flow, but that will readjust. And I'm also expecting in the same breath, the noise and the volatility from the Trump administration to slow down as the next few weeks progress.
You said energy, metals and BFSI. If you could just elaborate on some of these themes, Shiv. And energy is interesting because, globally we're talking about crude oil prices probably coming off even more because there's baby drill, and then there is, if the Russia-Ukraine issues sort out, then the Russian oil comes to the market full flow as well. So can you just elaborate on these themes which you think will be the new leaders?
Sure, Surbhi, great point. What I meant was renewable energy. I think, Indian government and the private sector is very bullish. We want to be energy independent by 2047. We are still meeting a lot of companies. And I think this year you will see a lot of solar and renewable companies come in the public domain as well. We are meeting a lot of private companies that are showing some great numbers. And the amazing thing is, we had a conference last week. The underlying trend from corporate India is actually not that bearish. Yes, the tape is indicating a different story right now. But if you look at corporate India, there is a rural revival happening. The budget has been very conducive for consumption themes as well. But what has transpired is that multiples got re-rated at a very fast pace, and earnings have not caught up. And earnings kind of disappointed in the last 2 quarters. But my sense would be that next quarter earnings could be on a more positive trend, especially given the kind of pullback that we have seen. We have been speaking to a lot of FPIs as well. Some of the large long-only allocators who had been waiting for a pullback are looking to deploy back in India. And I also think that what is going to happen is, there were a lot of QIPs, prefs, blocks coming to the market, which absorbed a lot of domestic flow. And I think that is going to slow down. So what's going to happen is a lot of flow is not going to move into the primary market, but back into the secondary markets where the pullbacks have happened. And people are going to go back and buy high quality stocks back again. And I think that's going to drive the thesis that we are about to see a rebound. It could happen today. It could happen tomorrow, next week. I'm not here to time it. But the reality is that given these levels, I think the India story is going to come back very strong post the noise of what's happening geopolitically between India, US, China, US.
Okay, cheers to that then, and we'll hold you at that, Shiv. Thanks a lot for joining in. You're sounding far more bullish, and as you said, some part of the street is cautious, but you think that this is the right time to start deploying and be selective and start nibbling in. Thanks a lot for joining in and giving us that quick take. By the way, the markets, from the time we started